Tomorrow's Leaders Today presents Applications. TLT is a nonprofit organization dedicated to helping develop youth leaders through education, collaboration, and mentorships with community and business leaders for the collective benefits of the students and their communities. We value and embrace diversity. We seek views that reflect all walks of life and reflect those views in our program. We recognize the special needs and diverse backgrounds of individuals, our students, volunteers, and our communities. All individuals are given an equal opportunity to be heard and to benefit from our program. What is an application? An application is a formal request to an authority for something. There are many types of applications you'll fill out during your life. Some of these include job applications, unemployment applications, credit card applications, and even mortgage applications. Job applications are likely going to be your first or second experience with applications. These are applications either filled out and delivered to the place of prospective employment or done online via a company's website. Nowadays, the latter is the most common way to apply. As a result, most companies employ what is known as an applicant tracking system. An applicant tracking system is a software application that employers use to easily manage job applications. It does this by allowing software to accept and go through resumes and applications to enable recruiters to hire faster while staying organized. The drawback to this is that even if you're qualified for the job, if you don't include the correct keywords in your resume, you might find yourself being passed over. Alright, so to get past the ATS, you want to take keywords that you find in the job posting and incorporate them into your resume and cover letter. You got to keep it simple because it is a program sorting through your resume, and you have to be sure it's in the right format so that it's able to go through and read everything on there. All right, some things involved in college applications are taking your ACT or SATs, getting your high school transcripts, filling out your application, asking for references, and preparing for interviews. So before you go and take the ACT or the SAT, you're going to want to double check with the college you're applying to and make sure that they don't prefer one over the other. For your high school transcripts, just check with your high school's front office and they'll let you know everything you need to obtain those. Now, when you're filling out your applications for college, they're usually online, and you want to be sure that you give yourself plenty of time before the deadlines, just in case you miss something. You're going to want to ask for letters of recommendation from at least 1 and up to 4 people. Be sure to give these people plenty of time to write it and make sure that they are professional writers and that you trust them to handle this. If there's special qualifications that you want emphasized, let them know ahead of time. And then some colleges will require interviews for you to prep for, but not all of them, so don't stress if your college doesn't require it. College applications also come with the Fafsa, which is the federal application for free student aid. The Fafsa is what you need to fill out to help get any help paying for your college from the government. It opens on October 1st and it's first come, first serve. So the sooner you apply, the better. So even if you don't think you're going to qualify for federal aid, you should still fill it out because colleges use it to determine your citizenship status, whether or not you qualify for merit-based scholarships, and whether or not a student has maximized need-based aid. If you ever lose your job through no fault of your own, you'll need to fill out an unemployment application. Now, a lot of times, unemployment will side with the worker, so even if it's kind of iffy, you should fill it out anyway. Each state's requirements are different, but in Texas, you need your personal contact information, the dates worked, identification review, statistical, citizenship, labor union, and pension information. All right, you can fill out your unemployment application at twc.texas.gov. Now you're going to need a printer to print out some of these pages, but if you don't have one, don't worry. If you don't have a printer, you can go to the following website found on this slide, which will help you locate a Workforce Solutions office, which will let you print off your form and complete it for absolutely free. Another application you might have to fill out is a rental application. While landlords can rent property to tenants without requiring them to apply, applications can provide valuable information about a renter, such as the renter's employment history and income. Also, landlords cannot run credit checks on potential tenants without written permission, and rental applications can be used to obtain written permission. What is credit and why does it matter? Credit is the ability of a customer to obtain goods or services before payment based on the trust that payment will be made in the future. How is that trust determined? Well, that's where your credit score comes in. It's a number between 300 and 850 that depicts a customer's creditworthiness. The higher the number, the better your score. Your credit score is based on your credit history, which is basically if you have payments to make, have you been making them on time? Or on the other hand, have you missed a bunch of payments? Now, they can get your credit score from what's called your credit report, which includes the number and types of your credit accounts and how long each account has been open, amounts owed on those accounts, the amount of available credit used, whether your bills are paid on time, number of recent credit inquiries, and information regarding any bankruptcies, liens, collections, or judgments. Also, a list of entities that have asked to see the customer's credit report. In the United States, there are 3 major credit reporting bureaus: Equifax, Experian, and TransUnion. Each of them are required to provide customers with 1 free report each year. Here's an example of what a credit application looks like. Note that it says co-applicant. While not every application will have that requirement, it's important to check, especially if you have little or no credit history. This can make all the difference in the interest rate you get, because if you have no credit score or a very low one, and you have someone willing to sign on with you with a high one, they average it together and you'll get a better rate. That rate that I just mentioned is also known as interest. In credit, interest is money paid regularly at a particular rate for the use of the money lent, or for delaying the repayment of debt. The longer you take to pay off the loan or debt, the more money you owe. So you not only owe the base of the loan, you end up paying more money for the interest that you have. Loan applications. Loans are sums of money that is borrowed. It is expected to pay it back with interest. This money can come from the federal government or from private sources such as banks. Here's an example of a loan application form. Let's look at auto loans. Buying a car is an exciting event, especially when it's your first. But before you go car shopping, be willing to take the time to research car loans with credit unions, banks, or online lenders before you head to the dealership. You can see if the dealer is willing to beat your offered loan rates. Often, dealers have access to cheaper financing through captive lenders, which are banks set up by the car companies just to make auto loans, and they can offer rates that are lower than those at other banks. It's worth filling out a loan application at the dealership to see what special deals and incentives you might qualify for, especially if you have strong credit. This is also a good place to use a co-signer if you don't have good credit of your own. Now you need to think about if you should get pre-qualified or pre-approved. Pre-approval means a lender has reviewed your credit report and other information to determine a loan amount and rate you'll likely receive. They'll do a hard credit pull, which is where they check your credit to make a lending decision with your authorization. They'll give you an offered rate, And that makes you a cash buyer at the dealership, which can also sometimes give you added discounts. In addition to giving you the best interest rate possible and giving you a realistic budget, pre-approval gives you leverage at the dealership and peace of mind about your purchase. It also helps prevent the dealer from overcharging you. Pre-qualification means you're likely to receive a loan at a given rate based on limited personal and financial information. It's not an offer to fund you. A soft credit pull occurs when a person or company checks your credit as part of a background check. Offered rate may change based on a full credit check and often has a wide range of interest rates you could qualify for, but doesn't guarantee anything. All right, let's look at mortgages. Buying a home is another exciting event. However, like with buying a car, it's important to take time to go over your financials before going house hunting. The bare minimum you're going to need for your credit score is 580. Generally acceptable is 620, and 760 will get you the best rates. Also, make certain you have enough money to cover the down payment and the closing costs. And some mortgages only require a 3 to 5% down payment, but you could be required to make a 20% down payment in some loan programs. All right, set a budget. Sit down and make an itemized list of your regular monthly expenses and add in all expenses related to your new house. Now take your total monthly expenses, divide it by your total monthly income. You'll end up with a percentage number that's known as DTI, which stands for debt to income ratio. This is what banks will look at to determine eligibility. Ideally, your DTI will be under 43%, and an ideal DTI will be 36%. Remember to take your lifestyle into account. Barely sneaking in under 43% may qualify you for a house, but doesn't necessarily mean you'll have anything left over. The common term for that is house poor. Talk to mortgage agents before you begin looking around. The first reason to talk to lenders is that they'll give you a feel for the type of mortgages you may be able to qualify for. You can ask as many questions as you'd like about possible terms, interest rate, and specific requirements for credit scores and DTI. Second, you'll be able to ask your chosen mortgage lender for a mortgage pre-approval. The pre-approval will include a maximum loan amount, which gives you a firm idea of what you can spend on a new home. This isn't a guarantee that you'll get a loan, it's simply a statement that you're financially qualified to receive one based on a preliminary examination of your finances. A mortgage pre-approval isn't a necessity when you want to shop for a home, but it makes things much easier. All information included in this presentation and more can be found at the following websites. Thank you for viewing this presentation brought to you by TLT.